Well, getting a move on, lots in action today. You've got a whole host of earnings that are slated to come out, and among the lot, there's IndusInd Bank that will be delivering its quarterly performance. While the growth guidance may be subdued, let's find out what the company could deliver and what the key parameters are. Let's take it across to Varun, who joins in with the ET Now estimates. Morning, Varun.
IndusInd Bank Q4 numbers are slated to be out today. Let's walk you through what to expect. Now, the net interest income, or NII, is expected to come in at 3,000 crores, which is similar to last quarter's 3,000 crores, and on a YOY basis is actually quite enlarged versus last year's 2,200 crores. At the PPP level, so operating level, you're looking at a number like 2,600 crores versus last quarter's 2,750 crores. On a YOY basis, it's also grown smartly versus last year's 2,000 crores. Now, the profit level is where there's been a high level of divergence among broker estimates, but the consensus rule is that provisions will be higher this quarter, and on account of that, we'll see a much lower PAT. So we're looking at a figure of somewhere around 400 crores versus last quarter's 1,300 crores, and still a handsome 10% growth over last year's 360 crores. So that's how the numbers are looking. The key monitorables for this quarter will be the growth guidance is obviously going to remain muted for most banks. There might be a higher borrowing cost this quarter though for IndusInd on account of the large deposit run they saw. We might see the credit cost spiking up on account of that. Slippages were to the tune of 2,000 crores last quarter. We're expecting a similar figure this year as well, and this quarter as well, forgive me. And just one key thing to look out for is that the levels of stress within the retail book and the real estate book might have exceeded the usual norm. So we'll be keeping an eye out for that as well. Barring that, their traditional CD book, which is the focal point for this bank, will remain in focus, as well as an update on the cards business given the moratorium and the current financial climate.